question also if you have any question for the last two sessions. So let's start our today's session, that is the QRMP scheme. So first of all, what is the long form of this scheme? So long form is the quarterly return monthly payment. So long form itself says that you have to file the quarterly return, but tax payment is monthly. So tax payment is you have to, so keep in mind that there are some procedure which you have to follow monthly, even though government is saying that this scheme is applicable quarterly. Only the return, that GSTR 3B and GSTR 1 is going to be shifted quarterly. So this is the long form of the scheme. Now, if you see whatever amendment we had discussed in the last three sessions, other than that, there are some amendments one can say which are made applicable from the 1st January, that is e-invoicing. So e-invoicing has made applicable from the 1st January for the taxpayer having a mandatory turnover of 100 crore and above. Then for some product, 8-digit HSN has made applicable. So there are many changes which has made applicable. As far as QRMP scheme is considered, which our today's discussion or which is the topic of today's discussion. So in this scheme, we are going to discuss first applicability of the scheme. That means to whom this scheme is applicable. Then how you have to transit or migrate under the scheme. So how you are going to transit under the scheme. Then how to opt for the scheme if not automatically transmitted. That we are going to discuss. Then what are the returns? So what is the monthly procedure and quarterly returns you require to or taxpayer required to file under the scheme. Then applicability of the interest and late fee. So how interest and late fee is applicable and when it is applicable we are going to discuss. And last but not least, one can say we are going to discuss challenges of the scheme, so that on which basis you have to decide, or any taxpayer has to decide that whether you intend to opt, whether you have to opt for the scheme, or whether you the scheme is not beneficial to you. So at the last of the session, we are giving the way forward with respect to opting of the scheme or to whom it is beneficial. Even though at the last of session, we are going to discuss about some of the way forward for the large taxpayer. So even the turnover is 5 crore and above. So any of the taxpayer or any of the participant joint has having the turnover above 5 crore, for them also we are going to discuss some of the way forward from this scheme. So let's start our today's discussion, QRMP scheme. So first of all, legal provisions. We are not going to definitely discuss about the legal provision because I know that no one is to legal. But just to get that from which section the power to introduce such a scheme has allowed, or which section empower the government to introduce such a scheme. So if you refer the provision to 39 section 39(1) and provision to section 39(7), if it empower the government to introduce the scheme. So provision to section 39(1) says that the government can, on the recommendation of council, notify the certain class of the registered person who shall furnish the return for every quarter or part thereof, subject to condition and restriction. That means government can specify the person to whom the quarter or who can avail the quarterly return scheme. So who are the, so till now this is the, one can say, section. So you can refer section 39(1), section 39 subsection 7. In addition to that, government has issued certain notifications. So notification 81, notification 82, notification 84(5), and one of the circular, which is the summary of all these notifications, is the circular number 143/13/2020. So these are the legal documents. If you intend to read the scheme, then these are the legal documents which you require to read. So please refer these documents. Anyhow, today we are going to cover each and every aspect of the scheme, so not required reading also. But even though for any legal aspect, these are the documents available in the public domain, and there are some FAQs also. So you can refer these documents for the purpose of getting any knowledge about the scheme. Now, section notification 84, one can say, is the key notification wherein it's notify the registered taxpayer other than person referred in section 14 and having an aggregate turnover up to 5 crore rupees in the preceding financial year and who had opted the furnished return for quarterly. That means for this scheme, or you have two conditions are necessary. First, the turnover or the aggregate turnover should be up to 5 crore. So if the taxpayer having an aggregate turnover up to 5 crore and so word is and both the condition has opted to furnish. So you have to opt. This is an option given. So it is not a mandatory first of all, because they had given an option whether you intend to opt or not. If the taxpayer has opted to furnish the return for every quarter, that is, if the taxpayer has opted for quarterly return, then only this scheme is applicable. So best part is that this scheme is not compulsory or mandatory. The taxpayer has to opt according to them whether they intend to opt for the scheme or not. So first condition is the aggregate turnover, and second condition that taxpayer has to opt for the scheme. Now, this scheme is not applicable to first composition dealer and second OIDR. Why OIDR? Because specifically they excluded the section 14 of the IGST Act. So OIDR. So for these schemes are the taxpayer who are composition dealer or opted for the composition. Now, taxpayer who is a composition dealer or had opted for the composition already filing the quarterly return, and thus one can say this scheme is not applicable. And OIDR, so online information, whoever the providing the online information database access and retrieval services to them, this scheme is not applicable. So these are two exclusion of the scheme. Now, as discussed, they are saying that the aggregate. So if you see, here is the term called as aggregate turnover. So this term is aggregate turnover. So what is means by aggregate turnover? So how you are going to compute the aggregate turnover and the applicability of the scheme? So aggregate turnover has defined under the GST Act. Aggregate turnover means the aggregate turnover of all taxable supplies. So first of all, you have to include the taxable supply plus exempt supply, export of goods, interstate supply. So same of a person having a same PAN. That means aggregate include all the supplies. So include even though if you are having an interest on deposit income and that is a business income, then definitely you have to include for the purpose of computing the aggregate turnover. So aggregate turnover include all the taxable supplies, exempt supply, export, interstate supply, all supply has to be included, and the turnover is to be computed PAN basis. Now, what is PAN basis? So friends, if a company having a same PAN has a presence over the 5 states, so the company's presence is in the 5 states, including in Maharashtra. So that company has registered under the GST with the 5 GSTN number. But aggregate turnover has to be PAN wise. That means for the 5 branches, we have to club the turnover of the 5 branches, and we have to see whether the club or the aggregate turnover of 5 branches is below 5 crore, and then only this scheme is applicable. Now, if you read the notification 84/2020, that notification says that the aggregate annual turnover for the preceding financial year shall be calculated in the common portal, taking into account the details furnished in the return by the taxpayer. So friends, this is very much risky. We have to keep in mind that whatever the turnover computed by the system is based on the data which you had furnished in the GSTR 3B or GSTR 1 during the last financial year. Now, what happened many times, the taxpayer forgot, or maybe data is not available, like exempted income, etc. Or one can say the data related to the interest on deposit. Such data may not be available, or data furnished could be one of the invoice not furnished, or maybe some invoices furnished in the GSTR 1 but 3B in 3B There could be the net turnover on account of credit note. So such a thing will be there. So considering only the turnover which is available on the online portal is very much risky. So even the notification 84 says that the aggregate annual turnover is computed by the system. So while checking the applicability of this scheme, if you see system level applicability, the system or the online portal is considering the aggregate turnover as per the GST return file. So don't rely on that. Please compute the aggregate turnover separately as per the definition given, including all the supplies, including exempt supply, and then on yourself keep or conclude that the whether the scheme is not applicable or not applicable. So don't consider the whether if the online portal says that the scheme is applicable, then don't rely on the one can say don't rely on the online portal. Please cross check once with your books of accounts whether really your aggregate turnover is below 5 crore or up to 5 crore or not. So this is very much critical to see the applicability. Once scheme is applicable, now the option is available for the quarterly return and monthly payment. So QRMP scheme. Now in the case of first example, where we have said that the for the 5 branches having the presence in the different states, you have to club the turnover and check the applicability. But while opting the scheme, there they had given an option that for any branch where you intend to opt, you can opt, or if in any branch or in case of any branch you don't opt and you have to go for the normal scheme, then you can opt for the normal scheme. So in our earlier example, if a company having a 5 branches and presence in the different state, then the company can say that the turnover of the company is below 5 crore for all the branches, but the company can opt for that. The for 2 branches, company can opt for the scheme, and for remaining 3 branches, they can file the GSTR 3B and GSTR 1 in the normal scheme also. So this option is available. The option can be, so one can say the limit has to be checked PAN basis, but option of QRMP scheme can be opted branch wise. So this given that they can opt for the branch wise option. Now, the aggregate turnover in any quarter. So they are saying the quarter, and as per GST law, what is the quarter? So first quarter is April, May, June. Then July, August, September is the second quarter. October, November, December is the third quarter, and January, February, March is the fourth quarter. And scheme is applicable for the 1st January. That means for January 2020. That means one can say scheme is applicable from the 4th quarter of the financial year 2021. So friends, in any quarter, if the turnover exceeds 5 crore, then the scheme or that taxpayer is not eligible for the scheme, even though for the previous year, let's say, so if on the previous year, let's say that scheme or previous year the turnover is below 5 crore, but and hence you had opted or taxpayer has opted in this year, but after that in this quarter, that means in the January quarter, the turnover is above 5 crore, then this scheme is not available. So even though at present scenario, you have to check once whether the scheme is applicable or not, because they are saying whenever the aggregate turnover exceeds in any quarter above 5 crore, then scheme is not applicable. So I think we had discussed in more detail about the applicability of the scheme. Even having any question for applicability of the scheme, definitely we will discuss at the end of the session. Now, once scheme is applicable, let's say now all the conditions are satisfied and the scheme is applicable to company or the firm. Then what is the procedure for the transition or opting for the scheme? So friends, as far as online portal is concerned, 2 options are given for the purpose of transition. First is the default migration, and second, required to opt for the taxpayer. Now, what is default migration? So some of the taxpayer has already migrated as per the system computation into the scheme. So who are the taxpayer? The taxpayer who has furnished the return of October within the time limit, that is 30th November 2020. This means the taxpayer having the turnover for the previous year below 5 crore as per the system competition. And second, the October 20th return or October 20th month return they had filed before 30th November 2020. Such a taxpayer has already migrated into the system or QRMP scheme automatically. That means default migration. So they're not required to opt for the scheme. They had already migrated for the scheme. And second option is the required to opt for the scheme. That means the taxpayer who has not automatically migrated. That means which are the taxpayer or who are the taxpayer? First, the taxpayer who had filed their GSTR 3B or GSTR 3B of October 2020 after 30th November 2020. So it's easy. The taxpayer having a turnover below 5 crore or up to 5 crore, but the October 20th return they had filed after 30th November, then such a taxpayer has not automatically migrated into the system. And if they intend to migrate and the scheme is applicable, then they have to opt for the scheme. So divide the taxpayer into whether in which category you are, whether in the default migration, that is after condition satisfied you had migrated defaultly, or you have to, or taxpayer has to opt for the scheme. Now, in case of default migration, if you see how they are going, how they had migrated into the taxpayer. So you are aware that the up to 1.5 crore earlier also they can furnish the quarterly GST return. So the taxpayer having a turnover up to 1.5 crore and for GSTR1 they had opted for quarterly return, then automatically by default option they had transferred it to the quarterly return. Now, the taxpayer or registered taxpayer having an aggregate turnover up to 1.5 crore and they had furnished a GSTR1 monthly. So even though earlier also the taxpayer having a quarterly option, but they had opted for the monthly, such a taxpayer defaulted is migrated into monthly scheme. That means they are under the normal scheme itself. So they have automatic transmission is monthly. But even though if you think such a taxpayer intend to opt, they can opt. This is only the default migration and on the basis how the government has migrated. So taxpayer who earlier having a 1.5 crore, they had opted for quarterly, then transferred to quarterly. And the taxpayer even after earlier also they were having an option for the quarterly return, but never has opted for the quarterly. They had into the normal scheme. So automatically they had migrated into the normal scheme. Further, the taxpayer having an aggregate turnover above more than 1.5 crore, then by default they had transferred to the quarterly return. So default option provided for the convenience. So friends, there is no compulsory, or one can say you have to check whether the scheme is applicable, whether migration. So for each and every parameter, check whether the default migration is first correct, or if it is not correct, you have to opt out for that migration. Second, check whether really the default migration or you intend to migrate. So even it is a correct as per the competition, whether the taxpayer has required to migrate or intend to opt for the normal scheme on the, then also you have to opt out from the migration. Then the person, as discussed, this option of opt out, that is they can free to change the option as required from the 5th of the December to 31st January 2020. So be aware, be careful. Now today is the I think today is the 23rd. So up to 31st January you can change the option. So please check whether the taxpayer is migrated. If it is migrated, whether really you intend to opt for the quarterly scheme. If you don't want to opt for the scheme, then please opt out. Else from the February month, so in the February month you have to file the return under the quarterly if the migration is default. So please ensure for if you intend to opt out from the scheme, please ensure that please opt out before 31st of the January 2021. Now Other person who can opt for the scheme. So the person having obtained registered during any quarter, that means if the person has has registered in this year, so then such a person not having any turnover for the last financial year, and for this financial year turnover up to January is below 5 crore, and they also knows that the up to March also turnover is not going to exceed 5 crore, then they can opt for this scheme. Then the registered taxpayer who are opting out. So any registered taxpayer who has who intend to opting out, or who have already opted out from the composition scheme, can can also opt for this scheme. So these are the taxpayer, but basic conditions should require to be satisfied. That means the turnover should be below 5 crore or up to 5 crore. Now, how to opt for the scheme? Now we had discussed about the default migration, but let's say the default migration is not available in our one of the company because the October month's return filed delayedly, that is the after 30th November. Then that company or that firm required to opt in for the scheme, and how you have to opt in. So there is an online facility given. So if you check the service tab, there is an online facility to opt in into the scheme. So that tab can be used for the opting into the scheme. So you can opt using that top tab for the scheme. Now, the opt-in and opt-out option is available throughout the year. So it is possible that for one quarter, the taxpayer has opted for the scheme, and for the next quarter again started the paying the taxes as per the normal scheme. So this is possible. Only the condition is for any quarter you have to opt for the scheme in or opt in or opt out from the scheme for the in the specified period. That means whenever you intend to opt in for the scheme, that is available from the first day of the second month of the preceding quarter to the last day of the first month of that quarter. So first, when you have to opt in, from the first day of the second month of the preceding quarter to the last day of the first month of that quarter. That means, let's say July to September quarter. So taxpayer has to opt for the July to September quarter. When this option is made will be available to the taxpayer. So from the first day of the second month of the preceding quarter. So July to September quarter. What is the preceding quarter of July to September? April, May, June. Second month of the first day of the second month. That means the option is available from the 1st May to the taxpayer and to the last day of that quarter. So quarter is July to September. So up to 31st July. So you can for the July to September quarter, the option to opt in is available from 1st of May to 31st of July. So let's keep in within that period only whatever option you have to choose, you can go for that option. I only follow the time period given. Now, to exercise this option, a registered taxpayer must have to furnish the last return as on the due date. So this is the time period within which you have to, or any taxpayer has to opt for the scheme. But one of the condition is that the last return, that means if you take the July to September quarter, that means the April, May, June either. So that means the June month return should be furnished before exercising the option. So after furnishing of the June return only, the option can be furnished. June, after furnishing of the, so you have to opt from the 1st May. So you have to submit the return of the April. So once you submitted the return of the April, then you can opt for this scheme. Now, a registered person are not required to exercise the option every quarter. So definitely, if you opted for the scheme, then it is not required to register or opt in for the scheme for every quarter. Once you opt in, that means if for this quarter you have already opted for the scheme, then for during the year, that scheme is by default, unless and until you specifically opt out from the scheme. So only if else for the next quarter, the scheme will be automatically, the taxpayer is under the quarterly or QRMP scheme. Now, this is about the migration. So I think everyone has understood about the migration. First, just to revise that, first, taxpayer, there is a default migration to the taxpayer who had not defaulted. They can migrate using the special or tab available under the online portal. They can opt in for the scheme. Second feature is that the scheme can be opted in any quarter only within the time specified. Just ensure that the last return before opting. So anytime, whenever you are opting the scheme, last month return has filed or not, that just ensure that one, whether the last return filed or not. So this is the about the migration or into the scheme and how you can opt in or opt out to the scheme. Now, once let's say you had opted for the scheme or any taxpayer has opted for the scheme, what are the return they has to file under the scheme? So return, friends, GSTR1 and 3B is not going to change. Only the change is GSTR1 has to be filed quarterly. GSTR3B is also quarterly. However, payment is monthly and IFF facility. So what is IFF? Invoice furnishing facility. That is also monthly. So there are two actions which taxpayer has to do monthly, even though return is quarterly. One, IFF, that is invoice furnishing facility, and second, payment. So these two are monthly only. So even though GSTR1 is quarterly, GSTR3B is quarterly. Now, what is IFF? So just IFF is the new concept, hence we will discuss in detail. So IFF is, as discussed, invoice furnishing facility. So details of the outward supply can be furnished by way of invoice furnishing facility is nothing but the GSTR1. Only you have to file the GSTR1, and here in this invoice furnishing facility, only uploading of the invoice required. So whatever the outward supply made in the subsequent in the last month can be furnished or can be uploaded till the 13th of the succeeding month. That means if we said for the May month, it is available from the 1st June to 30th June. It's nothing but GSTR1. Even though if you see the advisory issued for IFF, so on GSTN portal, you can get the advisory which is issued for the IFF. That only advisory is saying that it is nothing but the GSTR1, same table, same something, same, only the filing is different. So IFF, with the IFF facility, the taxpayer who had opted for the scheme can upload their outward invoice or the supply invoice on the online portal, and it is to be uploaded. So GSTR1 we are currently filed on the 11th, but IFF is available from the first day of the subsequent month till the 13th. Now, what is the drawback in this facility? Very key drawback is that this facility is available only up to 50 lakh rupees. That means any taxpayer cannot upload outward supply, or your outward supply shall not exceed 50 lakh in a month. That means monthly the taxpayer can upload up to 50 lakh only. So this is one can say drawback in the month. Second, after 13, the IFF is not available for the previous month. For the next month it is available, but after 13 for the previous month it's not available. Now, once IFF is any invoices is uploaded by using the IFF facility, then your recipient or the supplier get that invoice, or that invoice is duly reflected in the GSTR 2A of the recipient. So that 2A and 2B get updated. 2B we had not seen, but practically in our view 2B should be updated quarterly, because 2B is updated on the payment basis, and hence in our view it should be updated quarterly. So 2A get updated, but as per the circular they had issued, they also said the 2B. So practically we have to check whether both 2A and 2B of the recipient will get updated, or only 2A get updated if IFF facility is used by the small taxpayer. Now, this facility is available to the recipient. That means the recipient or the whoever you providing the services or the goods intend the ITC on monthly basis, then for that recipient you can use, or the taxpayer can use the facility. And remaining invoices, that is in any taxpayer or any for the any tax period having an above 50 lakh, then it's very much difficult that or that recipient does not get or shall not be included. So but if you had opted for the QRMP, then please check how many supplier intend for the monthly ITC. So that many supplier or for that many recipient, you have to opt or you have to upload the invoices using the IFF facility. So this is one of the criteria for opting for the scheme. Now, details of invoices furnished using, first, please note that the whatever the detail furnished using the IFF facility is not required to be furnished again in the monthly GSTR1. So again, here is reconciliation required. Whatever invoices taxpayer has furnished using the IFF in the month, that is in the first 2 months, is not required to be furnished in the GSTR1. If you furnish it, it could be that it would get considered double D, because in notification they specifically said that if invoices are already uploaded using IFF facility, then in GSTR1 that invoices are not required to be considered. Second, this facility is not mandatory and it's an optional. So if you require to opt for this facility, then IFF can be used. If don't require or any of the recipient not required the credit on monthly basis, then it is not necessary to upload the invoices directly in GSTR1. Invoices can be uploaded on quarterly basis. Now, as discussed, what are the details required to be furnished under the IFF? So friends, already we had discussed that the IFF is nothing but the GSTR1. So all the invoice-wise details like intrastate supplied, made to register person, debit note, credit note, etc. Even the amendment to that can be uploaded using the IFF facility. Second, monthly payment. In case of monthly payment, so so this is about the monthly uploading of the invoices. Now, this is our first action point. What is the second action point which is required monthly is the monthly payment, and monthly payment chalan is PMT06. So taxpayer has to use PMT06 chalan for the payment. Second, payment is to be 25th. So due date is 25th of the succeeding month. That means for the May month, due date is 25th June. Third, and very much critical, and please keep in mind, whenever paying the liability, please select the option monthly payment for quarterly taxpayer. So there is a tab while paying the option. Please select that in the tab that you are paying under this scheme. That means monthly payment for quarterly taxpayer. So only that the payment would get credited to this scheme. So please select that tab. Now for monthly, so how you now methodology of payment you got, but how you compute the monthly payment, or what is the liability of the monthly? So there are two options given by the government. One is fixed sum method and self-assessment method. So monthly payment could be made under the two methods, or can be used in any of the method, that is fixed sum method or the self-assessment method. So what is the fixed sum method? First of all, in the fixed sum method, there could be the pre-filled charan. So we had not seen practically, but they are saying that they will give the pre-filled charan wherein fixed sum, that is as per their computation, monthly payment will get disclosed in the charan. Now, chalan is this chalan is going to be generated by the system at the system level based on the last payment. Second, fixed sum method is not available to the some of the taxpayers, that is who had not furnished a return for the complete tax period of the preceding month. That means for the preceding month they had monthly, then for the last month if they had not furnished for the complete taxpayer of the complete taxpayer of the preceding month, if they had not furnished the return, then this fixed sum cannot be opted. So only the condition is that if you're the quarterly taxpayer, then for the last month payment should be there, or the last quarter return has required to be furnished, or if you are monthly taxpayer, then for the last month return required to be furnished to opt for the fixed sum method, because the system is going to be computing the fixed sum on the basis of the last month payment or the last quarter payment. Now there are two methods given under the fixed sum method. First is quarterly. In case of quarterly, the amount to be paid is the fixed 35% of the tax period in the cash in the preceding quarter. So 35% amount is fixed amount is to be paid. 35% of what? 35% of the tax paid in cash in the preceding quarter. Or there is a monthly competition, so you can either go for the quarterly competition or monthly competition. In case of monthly, you can pay equal to the tax paid in the last month. So don't compute anything, don't do any competition, just pay the whatever the tax paid in the last month. So just discuss with example. First, if the tax paid in the quarter, let's say January to March 21, that means in January you had not opted for the scheme, but from April you intend to opt for the scheme. Then let's say from January to March tax, or in the January to March 2021, CGST paid is 100, HGST paid is 100, IGST paid is 500, and cess paid is 50. Then tax which is required to be paid for the April to May is CGST 35. So in the first 2 months, that means April 2021 and May 2021. In the June, you have to compute as per the books or as in the self-assessment method, and you have to utilize this tax. So for the purpose of April and May month only, so that is the first 2 months of the quarter, you can pay 35% of 100, that means 35, IGST 35% of 500, that means 175, and says 17.5. So straight away do the 35%, pay the 35% in the first 2 months. And in the last month, that is in the June, last month of the quarter, in the month of the June, compute actual liability, take the credit of or take the or set up the payment already made and pay the balance amount in the last month of the quarter. So only for the 2 months. Second, in case of monthly, let's say in the March 2021, the liability paid CGST 50, HGST 50, and IGST 80. Then in such a case, tax required to be paid in each of the month, that is in the April and May, you can opt that the 50, 50, 50, 50, 50, and 80. That means whatever paid in the last month, that is March, same can be paid for the 2 months of the next quarter, that is 50, 50, 80. So these two methodologies are available for the payment of the tax. Now, the tax considered in this method, inward outward supply or input tax credit available. So can pay, that is self-assessment method, means everyone knows the self-assessment method. So compute tax liability and pay at actual. So compute your input tax credit, what are the input tax credit, what is eligible input tax credit, whether it is reflected or not. So compute the eligible input tax credit, take the input tax credit, whatever the actual payment you can make under this method. So this is the self-assessment method. Now the auto drafted, in this also there is an auto drafted input tax credit statement has made available in the 2B for every month for ascertainment of the STC. So the government is giving the auto drafted 2B for the purpose of the competition under the self-assessment. Now, first, as discussed, any of the method, that is fixed sum method or the self-assessment method, can be opted as per your convenience in any quarter. Any method can be opted. Second, if there is an adequate cash payment in the cash ledger or credit ledger, then even the nil tax liability can, and if there is a nil tax liability, then the taxpayer may not deposit any tax for the first 2 months or first month, and in second month they can deposit the tax. So this is also available option given to the taxpayer. Now, deposit for also there are two key features or key critical aspects which should be aware about, and please take the note of that, that if the tax is paid using the tax quarterly return and monthly scheme, then you have to utilize that tax only for that purpose. So only filing of the return at the end of the quarter, that tax can't be utilized for any other purpose. And in case of excess payment, so let's say in the in the first 2 months you had opted for the fixed sum, and as per the fixed sum, excess payment of the taxes has been made, and which is got to know after the 3 months. So you may say that your client is not having any sale, and you had paid under the fixed sale, and last month of the quarter you got to know that there is an excess payment of the GST. Then in such a cases, the refund, they are saying you can claim the refund. Now you know that the refund is how much difficult. So paying to the government an easy task, but getting the refund from the government is difficult task, and that was, one can say, this is one of the drawback of the scheme. So if you have to go for, in the case of the excess payment, if you have to file the refund, then this is very much hectic. This is required to be represented, that tax can be utilized for any other purpose. So this is about the payment or monthly payment. Now let's say a return. So what we had discussed, monthly you have to upload the invoices by using the QRMP, by using the IFF, that is invoice furnishing facility. And monthly tax payment can be made by using the two methodology, that is fixed sum methodology and second available, any of the two methodology, fixed sum methodology or second methodology, self-assessment methodology. Now GSTR1, now come to the return to be filed. As discussed, return is quarterly. So GSTR1 is quarterly, and normal return, now whatever you are furnishing, that GSTR1 only instead of monthly, under the scheme, quarterly GSTR1 is to be furnished along with the IFF facility. And again, I am repeating that whatever invoices uploaded using the IFF facility, please don't consider while filing of the GSTR1. Now about the GSTR3B. Now GSTR3B also same, that's why we are not going to discuss. Due date is also same, that is the 22nd or 24th this of the month of the succeeding month or the succeeding quarter. Then the whatever you are presently reporting in the GSTR3B, all the disclosure are as it is, only instead of monthly, 3B has to be filed quarterly. And payment is to be made after considering the payment which is already made for the first 2 months. So balance payment is to be made in the 3B and the liability, and you can furnish the GSTR3B quarterly. This is about the return filing. So we had seen the payment also, return filing also. So just a short revision about that. First, auto migration, check the auto migration. If not auto migrated, opt in, opt out, opt in or opt out scheme as per your convenience. If you opted into the scheme, change the this scheme or option is available up to the 31st January. So please exercise option before 31st January. Then this option can be exercised in any of the quarter of the year. So this is no bar, only there is a specific period given. Now monthly IFF is available from the 1st to 13th of the month. So invoice furnishing facility is available from the 1st to 13th of the succeeding month for the previous month. Then monthly payment is on the 25th of the succeeding month. Then quarterly GSTR1 and quarterly GSTR3B as it is now, we are whatever you are filing only instead of monthly, now GSTR1 and GSTR3B under the scheme has to be filed quarterly. So if you see the due date, one of the observation can be made, or that is the key observation, that now up to the 11th, taxpayer is filing GSTR1. So now IFF is up to the 11th under the scheme. And payment anyone we are doing at the time of 3B, that is at the time of 3B 20, 22 or 24, whatever the due date applicable. So we are paying on mostly for most of us is 22. So now instead of 22, 25th. So I think monthly due date is not going to change. So monthly whatever your work is not going to change as per our view, but it could differ scenario to scenario. So we'll discuss that in detail. So before that, we will discuss about the applicability of the interest and late fee, or when the interest or late fee is applicable. So friends, please keep in mind that under the fixed sum methodology, even if for the first 2 months of the quarter, the liability paid is less than the actual liability, the interest is not applicable. So this is a very simple to remember, that the fixed sum methodology has given by the government, and hence government is not going to levy any interest if the payment is less, but only it should be on the due date. So it should be on the 24th. If payment is less for the first 2 months and that realized in the next quarter, that is the last month of the quarter, and paid at the time of filing of the GST 3B, then there is no any interest liability. But the payment deposited itself is after due date, that is after 25th, then the liability is, then the interest liability will trigger. Now, in case of self-assessment method, interest is applicable even there is a short payment. So self-assessment method, by default, they had given option that you have to compute the correct liability, and hence the liability computation itself incorrect. Then in case of short payment, interest is applicable. So it's not only for fixed sum methodology. In case of short payment, interest is not applicable. But self-assessment, if you are opted for self-assessment, then interest is applicable. And even the payment beyond the due date, definitely interest will become applicable. Now, late fee. Late fee will be applicable in case of delay in furnishing of the outward supply and delay in furnishing of the return. So interest is late fee is applicable only if there is a delay in furnishing of the GSTR1 and GSTR3B, one can say. Now, there is no late fee applicable in case of delay in payment of the tax in case of first 2 months of the quarter. That means in case of delay in payment of tax, there is no late fee, even though in GST also, if there is an furnishing of the return, or the as the for the first 2 months there is return is not applicable, and hence one can say that if the delay in furnishing of the 2 months, in the first 2 months liability is delayed to be paid, then the late fee is not applicable. But in the third month, it becomes applicable, because your return will get delayed on account of payment. So once you paid, only that allows to file the return, and hence automatically return will get delayed and late fee will become applicable. So this is about scheme. We had covered all the aspects of the scheme. So just now action points from the perspective of the large taxpayer, as well as from the perspective of the taxpayer who intend to opt for the scheme. So first key action point for the large taxpayer. So who are large taxpayer? Who are having a turnover above 5 crore, and they are filing the monthly return, that is the normal scheme is compulsory to them. So they had not having any option for the quarterly scheme. So for such a taxpayer, please ensure or initiate communication from now whether vendor is intend to opt for the scheme or whether they had already opted for the scheme. So for the large taxpayers, start communicating with your vendor by way of email, call, by way of Google form, whether they had opted for the scheme. If they had opted for the scheme, ensure that the invoice for outward supply received from them, they are using the IFF facility for your outward supply. Because if the large taxpayer has to avail the ITC monthly, then the IFF facility, they has to ensure that their vendor are using the IFF facility for uploading their invoice. Because you may aware that the now automatically GSTR 3B considering the 2B for the purpose of competition of ITC or eligible ITC. So that's why just ensure whether using the IFF facility, they should upload the invoice on monthly basis, so that you can avail that credit on monthly. Working capital would not get blocked. Else what happened? Let's say you are having a 5 vendor and all the vendors are below 5 crore and opted for QRMP scheme. Amongst that, 3 of vendor has may not uploaded the invoice. In such a cases, it is very difficult to take the credit or avail the credit, and in the last month you got that your credit balance is huge. So ensure that the your credit balance should not be affected on the account of this scheme, and accordingly communicate with your vendor so that this scheme will not affect the company. Now, challenges and action point from the perspective of the taxpayer who intend to opt for the scheme. First of all, before opting the scheme, just keep in mind that the working capital is not going to save if you are opting for the fixed sum methodology. Why? Because in the first 2 months, the scheme says that the 35% you have to pay. That means you are paying more than 1/3 of the last month in the first month itself. So if let's say you are a rent provider and your liability is constant for the month, so that's why monthly liability is constant and the taxpayer has opted for the scheme. Now, for in the first month itself, the taxpayer has to pay under the fixed sum methodology 35%. That means more than 1/3. So your working capital, one can say, getting used more in this scheme. Instead of 1/3, at least I think government should keep that 1/3 liability. Then that would be the beneficial. Now the reconciliation of the details of the payment if opted for the fixed, definitely as discussed, reconciliation is required. First, reconciliation, when reconciliation is required, if taxpayer has opted for IFF, then please note that GSTR1 you are not not required to disclose the invoice. And if you are disclosed, then that could be considered doubly while considering for the payment. And hence you have to ensure the reconciliation quarterly, whatever invoices uploaded, whatever invoices not uploaded. Second, even in the fixed sum methodology, whatever the books liability vis-a-vis whatever the liability paid is required to be reconciled. Next, excess payment. So most of the drawback under the scheme, that the scheme says that in case of excess payment of the GST for the quarter could lead to refund. So refund can be claimed in case of excess payment, but whether it is easy task to claim the refund, everyone knows. I don't think that we required to discuss, so everyone knows. Then IFF facility is available only up to 50 lakhs. So even your recipient or the supplier is saying that my invoice is required to be uploaded monthly, you can't upload if it is above 50 lakh. So there is a possibility that in any of the month the turnover is above 50 lakh, but in such a cases IFF facility is not available. So even monthly computation is required and quarterly reconciliation with the books is also essential. So these are the some of the challenges. Keeping in mind these challenges, decide whether you really intend to offer the scheme or normal scheme is better. I think for many of the taxpayers, they will see normal scheme is better than this. So who are the taxpayers to whom this scheme could be beneficial? First, the taxpayer who are having a B2C supply. That means they don't want to use the IFF, then straightforward they can pay in the last GSTR1, they can file the GSTR1 quarterly. So that for, again, even though in case of B2C supply, if they are having a variable liability in the month, then it is not recommended to offer the scheme. If they knows that our monthly turnover is constant, then you can offer the scheme, that is the monthly liability somehow varies or it's constant. For that, such a taxpayer can opt for the scheme. So I think these are some of the taxpayer. Second example, renting wherein no ITC, more ITC is available, then such a taxpayer opt for this. Then such a taxpayer can opt for the scheme. The taxpayer who intend to have a stock or varies the stock record, then I don't think that this scheme is applicable, or they can opt for this scheme, because their ITC would be varies month to month, and hence in such a cases there could be possibility that the even in case of availability of ITC, you had paid the GST. So I think there are some of the taxpayers who only can benefited from this scheme as per our view, but there could be the different view also, and we definitely like to discuss such a view also. So this is about our today's session. So we had discussed all the part